Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is updates, two new stocks, plus a currency pair, and the worst advice I've ever heard given in trading. This is for the week of August 22nd, 2016. Hope you had a great week. I had an eventful week. My 10-year-old son had his adenoids removed and tubes put in his ears, so he's still feeling kind of miserable, but at least he's hearing better. Okay, so let's go over the stocks from last week. Cliffs Natural Resources. So where we left Cliff off, we were testing the 50-day moving average. We did get a bounce Monday, but Tuesday we were back below the 50-day moving average and then finished out the week underneath it. So no reversal there. And I talked about that last week, that we're watching for a reversal there. It did not happen. Next support, just under 6 and just under 550. So you can watch to see if that comes in as well. Actually, I didn't draw this in too, but okay. There's also 583, so we'll put that up there. There we go. Okay. All right, so that's Cliffs. And then Domino's. Domino's came down to the 20 EMA, did get a reversal candle. Aha! And then a big candle on Thursday, pause on Friday. Looks like it could still be headed for $150. So let's look at two new stocks. They're both biotechs, a short and a long. First is Spectrum Pharmaceuticals. And Spectrum had a big shot down, big impulse through the 200-day moving average. And although it tried to get back above it, it could not close back above it and is now in a coil. Momentum coupled with position suggests that this stock is looking to go lower. It could be hard to borrow though, so you have to check with your broker, of course, if you decide to short it. That's up to you. You got 550 and then you got some support in like the low fives, but if that gives way, look for a full retracement down to 41, I'm sorry, to 414, not 41, to 415, 414, sorry. Okay, so that's SPPI. As always, wait for confirmation. Wait for the break. Okay, if it breaks the other way, hey, no harm, no foul. Second stock is a biotech as well. Did I say I had two biotechs? Achillion Pharmaceuticals, Inc. ACHN is the symbol. So the stock is in dual triangles. It's in a bigger triangle, which you see in white, and then a smaller triangle, which you see in yellow. Now, the white triangle I'm not really a big fan of because there's a lot of space in here, and usually I like to see it more bunched up near the lines, like the yellow lines here. But what the white lines are really doing is they're really bracketing the range of the year, range of 2016. And you could see we're kind of sitting right in the middle. I mean, let's see, tools, drawing tools, Fibonacci retracement. And where are we? No, so we're not, yeah. So we're a little bit, we're not quite at 50%, which is, okay, so we're not quite at 50%. I don't know how to freaking erase this. What are you doing to me? What are you doing to me? What are you doing to me? I don't want to, I'm not going to waste all your time watching me fiddle around with the Fibonacci retracement. But anyway, what you want to watch for here is a break of one of these yellow lines, but you also have to be really respectful of these white lines. Even though, it may not be a great triangle, you still have to give the respect to these white lines. So if it breaks out here, which looks like it's going to break out above $9, would be an official breakout. You could get a quick move up to here, which is a little over 10.06, and then possibly up to here at 10.95. Now, of course, a move from $9 to 10.06, it wouldn't satisfy Kachingo with his nannies and the sushi, but for normal people, that's a pretty good move. All right, now on the downside, if it breaks down, you want to watch the 200-day moving average, and of course, you want to watch this white line. Just like on the upside, you want to watch this white line as well. So ACHN and SPPI. Now, before I talk about the currency pair, I'll give you a hint. It's a dollar yen. I want to talk about the worst advice I've ever heard given in trading. So, as you know, if you're watching my videos, I've been on a quest to just read and watch as much as I can, looking for the big problems that most traders are facing. And I've been doing this for a very long time. I have lists and lists of things I've heard over the past 16 years of teaching other traders how to trade. My own challenges, of course, which could be a whole book in and of itself. All right. So all of that together has me on a quest to find out. And you're welcome to write me at winningedgetrader@gmail.com. Give me your own issues. Hey, what do you struggle with? So I came across somebody and they gave the advice of keeping losses, take losses quickly. Now, I am a big fan of keep your losers small and let your winners run. I know it's a lot of just lip service, but it's basically the secret to all the billionaires in the markets over the years. Right? That's what they do. They let their winners run. They cut their losers short. It's great, but to me, just to echo that and just to say, "Oh, take your losses quickly," it's like, well, what does that mean? Hey, what does that mean? Does that mean if you enter and it immediately goes red against you, you get out? Really? That quick? Or no, well, you use this percentage or that percentage or use this. Okay, well, here's the deal. You have to, if you're going to give that advice, you have to be specific about it. All right? It's great to start saying the mantras and, oh, cut your losers short and let your winners run. But without specifics, what good is the advice? And the answer is it's really not good at all. It can wind up being harmful because you may think that you want to cut as soon as you go red. You keep cutting, and the next thing you know, you run a sample of 100 trades and you realize that 98 of them go against you before they actually make money. I had a mentor who I have a lot of respect for, and his big mantra was, if the position does not move in my favor right away, I get out and then I look for another trade. Or it doesn't move immediately in my favor. That's what he used to say. And I would always challenge him and say, well, what does immediately mean? How many seconds are in it immediately? How many minutes are in it immediately? Okay, great. If you buy a breakout, boom, you want the trade to move. If you're short a breakdown, boom, you want the trade to move. But if you're buying a pullback or selling into a rally and you're taking it off resistance or you're taking it off support, that's one way. Or you wait for a reversal candle and then you use that reversal candle as your anchor to take it, okay? Then it may draw down against you a little bit, but still eventually go in your favor. That's why it's always important to set stops where your setup is wrong. Okay? So more on that as we get more into stop loss and stuff as I keep doing the videos, but just want to touch on that a little bit. The advice itself, getting out of losers quickly, is fine in theory, but without specificity, it's pretty worthless. All right, let's talk about the dollar versus the yen. Okay, that is not the right symbol because I forgot. I could just cut this out and make me look like I'm not as hopeless on this as I am. Okay, so here's the dollar versus the Japanese yen. And boy, really nice downtrend. I'm sure the super guru caught it up here. But back in the real world now, coming up at an inflection point. Okay, it's a key decision area. It's the lowest low for a long, long time. And you could see we are wedging up here. Now, a lot of people feel that a falling wedge is bullish, or they'll say a falling wedge is bullish. It's not the case. Wedges are contraction patterns. Falling wedges can lead to bearish moves or bullish moves. Rising wedges can lead to bullish moves or bearish moves. But what I really want to pay attention to here is What happens if we squirt out to the downside and find support at this low? Could we get a turn and run here? I mean, you got the moving averages all sloping down pretty strong. You have a downtrend in every definition you want. Lower lows and lower highs for the past. I mean, if you want to count the breakdown from here, you got at least for 2016. So something's going to happen here. Now, could we just squirt out of this without testing this low? Of course. And if we do squirt out to the upside without testing the low, you have these moving averages to watch as potential resistance. But if we come out the downside, watch what we do at this low. And if we break that low, okay, do the sellers come in? Okay, or do responsive buyers come in? Do the initiative sellers come in? Do they start selling it there? Or do the responsive buyers pick it up under the lows where the weak hands may be selling and then try to get a bounce? I think there's a really nice opportunity here in the dollar yen setting up. Any questions? winningedgetrader@gmail.com. Thank you once again for watching my video. I will talk to you in next week's video. Have a great trading week.